Warm welcome to you all, and welcome to the next episode of Property Developers and Investors podcast. And today I'm delighted to welcome Mr. Fred Bristol from Brickowner. Hi Fred, how are you, sir?
Hi Mark, thank you very much for having me today.
Great, no, it's an absolute pleasure, and one of our trusted partners in Equa Academy. And it's really important for the listeners to understand the diversity of opportunities that await not only developers but investors, and your business is right at the epicenter of creating real value-added services to both of those. And I'm really looking forward to exploring that with you today in this episode. But Fred, you're a man of many experiences in property, going back some distance. So maybe you could give our listeners a bit of an outline of some of your experiences and ultimately how you came about the concept of Brickowner.
Sure. Yes, so after I left university in 2002, and after university I actually moved to the Baltic states, a specific country, Estonia, and I worked there in the Baltics from 2002 till 2010, and over time we built up a portfolio which spans, they're small countries actually, so you've got to diversify, so spanned kind of residential, land, commercial, and industrial as well. And yeah, we built a portfolio up over time. And then 2010, I came back to the UK. And then between 2010 and 2015, I own different property. I have different property interests I own in the UK. And a lot of it was linked to planning. So mainly residential planning. So I kind of was working on that for about 5 years actually. And I still have some of his interests, but it doesn't take up very much of my time now. And then 2015, I was in Lincolnshire, a town where I own some interests, and looking at starting to buy up residential housing, because at the time you could buy the kind of Victorian cottages for more or less what you could build them for, just under even £100 a square foot. And I thought, strong rental demands, I thought a really interesting opportunity at the time to start buying them up. And I thought, actually, let's set up a property fund, and then other people can also access these opportunities, which they might not know about or will be able to access. So then I thought, actually, we'll set up a property fund where people, individuals, investors can have problems because they might need significantly large amounts, and there's a lot of paperwork. Why not set up a technology platform? So that was the kind of beginning of the idea of Brickowner. And then over that was summer of 2015, kind of honing the business model. And then 2016, we built the technology platform, took a year to build. And then we launched it in kind of January 2017. And since then, we've done kind of a number of projects spanning all sorts, from residential to industrial, to even a stake in a hotel, student housing, a kind of a broad range of different investment opportunities.
So how did you manage the transition from a property background to running an IT fintech organization in terms of the skills there? It's quite a transition.
Yeah, sure. So funny enough, the individual I used to work with in Estonia full time, called Toby, he, between 2010 and 2015, whilst I was in the UK continuing to do property, he actually moved to Berlin and set up a property accelerator. Sorry, not a property accelerator, a technology accelerator. So he then, over those 5 years, got all the background required to kind of know how to set up or create a technology business. So he co-founded Brickowner with me. So I kind of piggybacked off some of his kind of skills that were in the early days, and still now actually. Yeah. So that was it really.
Fascinating. We're in the process of developing a web platform. Yeah. Which will go into beta mode before Christmas. So something very much close to my heart at the moment, and maybe a conversation we can have later on. So what makes peer-to-peer crowdfunding platforms so attractive to not only developers but also investors. Where have you seen the appeal over the last 7 or 8 years?
Sure. So I would say from the investor side, firstly, we have investors who, well, you can invest from anywhere in the world 24/7, which is incredibly attractive, especially nowadays where people travel a lot, and they are quite rightly more demanding. So they don't want to be told when to go into your bank. You've got a kind of a 2-hour window when it's open. They want to invest when it suits them. So I think that's the first thing. They can log on wherever they are in the world, whatever time, and see the opportunity. And then also from a paperwork perspective, if you're an investor, you don't want to, no one wants 100 pages of papers to then go through and then sign and scan and then do all the ID checks, run around trying to get your passport certified. And then you've been told that your kind of IDs are 3 months out of date, you'll get another utility bill. So it just provides a very easy method for investors to access and then use access investment opportunity and then invest and then monitor in terms of updates. So that's kind of the offering, as it were, for investors. And also the offering is a lot of the kind of, call it private equity and property investments. Some of them have significantly high minimums. So some of them could be called for £1 million or 150,000. So I guess our offering is also, we're an aggregator. So a number of different investors will come invest alongside each other through our platform, and because there's a number of investors rather than just one, it means they can access an opportunity which otherwise they might not have been able to without putting significantly larger amounts of money in. And then also from the kind of property developer asset manager perspective, managing investors, onboarding investors, dealing with kind of compliance and IDs is incredibly cumbersome and time consuming. So we provide a solution for that, so that they deal with us, and all the updates will go through us to the investors. And again, all the kind of every year you have to investors are required to reclassify of whether they're kind of a sophisticated or a high net worth investor. So our system is fully automated, so it just does that, rather than if you're a developer having to or an asset manager having to kind of do it offline. So we just provide a very, I guess, a simple way forward for them as well.
Yeah, again, it's a great point, isn't it? About how volatility in the market, the big sway in equities in the global markets, and we all know about the challenges in the world today. That just because somebody qualified as a high net worth or sophisticated investor 1 or 2 years ago doesn't necessarily mean they are now.
Yeah.
So compliance and strong governance seems to be a trademark in what you're providing, and I'm guessing that creates an assurance platform for both the developer and the investor.
Yeah, exactly. It helps build trust, I guess, both sides.
Yeah. And do you see that trust that's built on, and you see investors rolling investment through and extending their portfolio from one development into another?
Yeah, we have a very high repeat investor rate. So it's around 72%. So invest more than once, which has been consistent in terms of the kind of repeat rates. And some have invested in over probably 10. A number have invested in over 10 of our projects as well.
Okay. And you mentioned quite a wide array of residential, commercial, industrial, hotels. Could you maybe pick out 1 or 2 examples, and just to give our listeners a sense of scale and whether the investors are on a debt or an equity basis? Just give us a flavour.
Yeah, sure. So again, we've done an incredibly broad range of investments. So we have done we've done a debt, like a portion of a debt fund a while ago. So in effect, you're taking a stake alongside many others in a fund, a pooled, which then gets lent to developers. We've done, from the scale, we've done 4 houses, or up to kind of some of the projects are significantly larger. So they might be a block of 20 flats on the residential side. And then again, we've helped fund like an industrial unit as well, which then got sold. So kind of a broad range, and again on the security side, often we'll have a second charge as well, and the developer almost always puts, or the asset manager, some kind of investment in on a first loss basis as well.
Okay, so you've got a senior provider. You're providing the subordinated debt, is it, or would that be?
Maybe what we do is equity, but it's
okay.
yeah, but it's equity, but it would sit in front of it would have preference over the developers or the asset managers' equity, but it's still equity.
Yeah. So they've got skin in the game. The developers got skin in the game. Yeah.
And actually on the kind of equity front, I mean, funny enough, because obviously we're kind of entering an inflationary. Well, we're not entering. We're in it now. An inflationary environment. Equity is well, the problem with debt is great because you have better security, but you are on a fixed return. Equity, you're taking greater risk because you don't have as good a security, but it is historically has been shown to be obviously a better hedge against inflation because it is susceptible to the up and the down. So if there is an inflationary swing in terms of values, it does benefit from that, whereas debt doesn't.
Yeah, and you're providing a service of not just a platform for investment and security and return, but I think you mentioned the maintenance, the ongoing communication and checks and updates and various things, that comms bridge. Yeah,
exactly. And actually, fun enough, we launched maybe a year and maybe even up to a year and a half ago now, a secondary market. So if investors are in a project and the project projected term is 3 years, but they are looking to get some or all of their investment back before the end of the term, for whatever reason, people are, their lives change or needs change, they're able to put a portion of or all of their investment up for sale in the secondary market. But the caveat there is we provide a marketplace, but we're not a market maker. So it's kind of willing buyer, willing seller. But we'll make it more dynamic as well, actually, over time. But we have launched that service as well.
Yeah. Yeah. And you mentioned term then. Typically, what would be the range of term for the projects leading right the way through to the exit and return of funds to investors?
Sure. So broad range. So kind of the shortest we've done is a year, and the longest is 5 years actually. I would say 5 years is a long time for many of the investors that we speak to or deal with. The kind of sweet spots is probably 3 years probably. Anything under 1 year, from our perspective, it becomes quite hard to deal with because it's a lot of effort kind of onboarding a project. So if it then finishes after 2 months, it's kind of it's probably not even we haven't even seen a demand for very incredibly short term under a year either. So the minimum has always been a year really for us.
Yeah. And do you see your business focusing in on property development? Do you see a stage in the future where there might be more business propositions?
Sure. So we would only property. The concept of property is quite broad, so kind of asset-backed, physical asset. But we would never do anything other than real assets, property assets. I mean, I say never. I cannot envisage right now doing anything like that. Yeah.
Yeah.
So I think from what I've found in life, focus is a good thing. If you try and do everything, you actually achieve nothing half the time.
Absolutely. Couldn't agree more with that. Yeah. So the due diligence that's required, where do you see in the, I guess, the entire peer-to-peer industry, where do you see the burden, the responsibility of due diligence sitting? Clearly, the bank playing a part where there's a senior debt provider, but the developer, the peer-to-peer provider, and the investor. How do you square that circle?
Sure. So firstly, it's important to say that we do not advise as a business for investors to invest. We provide investments on our platform, and it's up to them to decide if they are interested in investing or not, and how much they want to invest or not invest. Having said that, obviously we do thorough, detailed due diligence, which involves, valuations. So funny enough, because we're not the senior lender, often by the time the developer or asset managers come to us, they almost have a pack because they would have spoken to senior lenders. But ultimately, it involves, valuations of, say, if it's development of the land, build costs, exit prices, and then obviously their kind of track record as well, and just getting comfortable with everything, and then seeing if we like it, and then kind of everything stacks up, and then kind of progressing from there, really.
Yeah, that's. I think that's important. I've seen reference quite a few times to people saying, well, the due diligence is a lot lighter from an investor's perspective on peer-to-peer. And whilst, yes, there is the senior lenders DD and the monitoring surveyors pack and the red book and things like that, there is never a light DD from an investor's perspective. It's the buyer beware, as you say.
Sure.
So we know we've been through a pretty challenging 2 years with COVID, a lot of changes, huge amount of volatility, and I think the only certainty in the world is change, and that's set to continue. We've both been growing businesses over the last 3-4 years during that uncertainty. What challenges have you seen in business growth and the economy that our listeners might relate to?
Sure. So, what challenges have we seen? So, one is we've never actually had. So, when investors have invested, we don't have a tax efficient structure, and the reason for that is because we do equity. Whereas if we did debt, investors could invest using innovative finance ISAs and even SASs as well. Whereas because we've had equity, that hasn't been possible. So actually what we're doing right now is creating a REIT, which we're looking to launch end of the year. And then it would be tax efficient for investors. So they could invest ISAs, they could invest using SASs and SIPs as well. And we like the idea of it because it would provide income paid either monthly or quarterly, but then also potential would be equity, so potential capital growth, again, go back to the hedge against inflation. But yeah, so one thing we've lacked is a tax efficient way for investors to invest into property. And also creating a fund, I think, is important because it helps instant diversification. So otherwise investors I'm always been big on diversifying. I think it's very important for all investors to always diversify. But actually, the thing I like about a single pool is from every pound you invest, it's automatically diversified, which I like the idea of as well. Yeah, no,
I couldn't agree more. So you've touched on some of the plans for the future. REIT, any other plans in terms of growth? I guess scaling the business.
Sure. Yeah, sure. So obviously the kind of creating and launching a REIT and growing a REIT and the business is expensive. So actually we've got a lot of shareholders already in our holding company, and we're doing right now we opened up another investment round where investors in the Brickowner Holdings, anyone that invested is EIS eligible, they would benefit from owning a stake in all the technology, all the platform, including the new REIT, the management vehicle for that as well. So we're doing that right now actually as well. But as well as this REIT, the idea is we launched the first REIT. We'll carry on doing deal by deal, so if that's a question I've got. because I think many investors still like picking individual deal investments. But after this REIT, we would look to do a number of others, each with a different focus in terms of different property subsector.
Yeah. Very interesting. And REITs, and also I'm a SaaS trustee as well, and our Equa Academy community, there are probably 60 or 70% of members have got a SaaS. It's a very vibrant community, and again, looking for strong due diligence, diversification, and not just short-term gains, looking at long-term, and obviously a SaaS can invest in a business as well, including a REIT. So some real common ground, which is something we might explore in the weeks and months to come, Fred.
Yeah, it's very interesting.
One question I always like to close any podcast on is, given what you know now, if you take yourself back to your teenage years, what advice would you give to your younger self?
Yeah, I think what would I give? I think the old one, like patience is a virtue. I think it's important to be patient. I think it's important to say no as well, and that's to anything, be it investment, be it something you're not comfortable with, or anything really. I think, personally, I'm very instinctive as a person, so I think follow instincts they kept mankind and animals alive for a long time. So I think it's important to follow your instincts as well.
Great advice. If only somebody was around, all those years ago to tell us when we were 14, 15, 16, eh? And that's the idea of this podcast, is to give something back to the, not just the younger members of the community, at all age ranges. So I really appreciate that. Really appreciate the expertise you brought and the deep insight into the peer-to-peer market, and not just the business you've grown, but also your future direction. And I have a feeling our community would be very interested, maybe next year, to revisit and see where some of those developments are going. So maybe we could do this again sometime very soon.
That sounds great.
So many of our developers and investors in the community, I'm sure, will be wanting to get in contact. So where's the best place for them to contact you?
Sure. So personally, like LinkedIn, I'm on LinkedIn, Fred Bristol, or through the company website, so brickowner.com. Contact me there. And also join the website, because then you'll get all the email updates generally, and you can start understanding the business better. And follow us on LinkedIn. Brickowner has a LinkedIn. But in terms of me personally, either through our website as a contact, they'll get to me if you search for me, or else on my personal LinkedIn is probably easiest as well.
Fred, it's been an absolute pleasure. Thank you so much for your time and your wisdom that you shared freely with us all. And all the best for the future. Thank you, Fred Bristol, co-founder of Brickowner.